Hey, what's going on, everybody? It's Friday. What a day. What a Friday. April 22nd. Folks, everybody's got to calm down. We just got to all calm down. So much panic today. People losing their minds. I'm going to go over everything because a lot needs to be discussed here, but I'm sure I don't have to tell you. I mean, the market was down like 1,000 points today. Oh my God. The good news is the March lows are still intact, but NASDAQ is getting close, and that might happen in the short term because we still have this hysterical panic going on now about interest rates. Folks, if the Fed even takes its policy rate up to 3.5%, which is, the forecast over the next 15 months or something like that, 18 months. I mean, that's still historically a very low interest rate, all right? But I'm going to set that aside for a second. And let's discuss. I mean, first of all, once again, it is this insane, psychotic focus on interest rates at the expense of everything else, just ignoring everything else, not at the expense, but just completely absolutely ignoring everything else. Actually, we had some very good numbers today on manufacturing. We had good numbers on housing starts. I mean, we have good numbers in the for the labor market, for employment. But there is just, and this has been something now that has been going on for a long time. It's something that I've been talking about for a long time. The mental illness that is monetarism, where every other aspect of economic activity or drivers of economic activity are completely ignored, and the only focus comes down to the policy interest rate of the central bank, the Fed, as if that's really capable of doing anything other than setting a price level or redistributing income to a certain degree in the economy. I want to read something to you because after this insane market sell-off today, and that's what it was driven by sheer emotion, by just a shocking display of myopic focus on one thing, a shocking, I think, display of ignorance. I also think, by the way, this is a setup not just for a market rally, but for a major new bull market to develop very soon. And I'll talk about that a little bit more. But I want to read to you, I want to give you some of the bank numbers that came out after the close today. I'm just going to read it off my phone here. Because they were really, truly stunning. I mean, this is the banking data from the Fed's H8 release that comes out every Friday, and this is through the week ending April 13th. So it's through last Wednesday. Here's just some snippets off of that. Loans increased by 64 billion in the week. That was the biggest increase in loans in 26 months. And by the way, 26 months ago, that was when we had the pandemic-backed loans. That's when the first iteration of the pandemic stimulus was passed, and those loans were guaranteed by the government. I mean, if you strip that out, this is one of the biggest one-week increases in loans ever, okay? Commercial and industrial loans, all right, commercial loans indicating activity in the commercial sector with firms, with businesses. It could be related to the energy sector. It could be related, again, to more inventory accumulation. Commercial and industrial loans were up 30.4 billion. This was also the biggest increase in 2 years. And again, that goes back to when we had the government-backed pandemic loans at the very beginning of the pandemic in April, May 2020. Real estate loans were up 11.7 billion. That was the 10th consecutive weekly increase for a total of $96 billion in real estate loans over the last 10 weeks. Consumer loans were up $12.2 billion. I spoke about this in a video last Friday, I believe, that I was a little bit concerned because there was a dip in consumer loans, but I said, look, let's give it another week or two. They bounced right back up and erased the decline from the previous week. Credit card and revolving credit was up $9 billion. Auto loans rebounded again, up $300 million. Bank residual. What is residual? That's the assets minus the liabilities of the bank. Literally the net worth of banks, commercial banks, the capital, up $14.5 billion to $2.04 trillion. It was the third week up in residual for an increase of $60 billion, and it is the highest level in 9 months. Now, let me even add something to this, and that's just some snippets off of the banking data that came out today. And again, that's through the week ending April 13th. Now, all this happened in a week that saw a $57 billion decline in reserve assets. In other words, in the week ending April 13th, reserves in the banking system dropped by $57 billion. And if you've been following me for any length of time, you know that when reserve assets go down, right, those are assets, reserves are assets of banks. When they go down, it makes room on the bank's balance sheets to add other assets like loans. So it makes sense when reserve assets went down that week by $57 billion, banks added a ton of loans. All right? Now, this is, all central banks, if you look at kind of the modus operandi of what they try to do, what they try to foster as a result of their monetary policy, you always hear them talking about this. It's like, we want to spur credit creation. The only problem is they always do it the wrong way. You know, they think by piling trillions of reserves onto bank balance sheets that is going to spur credit creation, and it doesn't, because those trillions of reserves need a corresponding amount of capital to be able to support that, or otherwise the banks can't add different kinds of assets like loans or securities, right? So this is literally what's happening now is literally what all central banks strive so hard to achieve, the growth in credit. And it's happening like big time, big time, big time. All right. Now, here's the thing that's going to blow your mind. And it's going to also take me into another direction in this conversation. I said that in the week in question, April 13th, reserve assets in the system fell by $57 billion. Well, guess what? In this week, ending Wednesday, April 20th, reserve assets dropped, you ready for this? By $467 billion. 460, almost half a trillion dropped this week. Why did that happen? Largely because we were filing taxes. That's a drain on reserves, treasury debt sales, etc. But here's a couple of things I want to say about that. First, keep in mind what I just told you about the week of April 13th when we saw a 60 billion drop in reserves. We saw a huge increase in the banks making loans. Now we see like almost a 10-fold increase in that reserve drop. Can you imagine what the numbers are going to be when we see that next Friday? Credit growth is just going to be blowing through the roof. I'm sure you're going to be getting a lot of offers in your mailbox about credit, okay? Again, this goes back to what every single central bank strives to achieve is credit growth, right? And this is happening big time, big time, big time. But the other thing that's fascinating to me is like all of these people, all these monetarists who constantly scream, the Fed is printing money, they're printing money, they're printing money. Where are they now when you had nearly a $500 billion drop in the money supply and reserves, system reserves? They're nowhere. You don't hear any of them say unprinting money. They're unprinting money. No. And yet, with this big drop, we're going to see this explosion in bank credit. This total explosion in bank credit. Now, I don't know about you, but when banks are lending like crazy, to me, that means two things. Number one, they see a good economic environment to lend into, right? Because a bank won't make a loan unless the borrower is credit worthy. What does that mean? It means the borrower has the income to pay back the loan, has the wherewithal to pay back the loan, okay? And the business is solid. The opportunity is solid, okay? Number one. Number two, credit growth is fundamental to economic growth. I mean, we're always hearing about that. Like, that's again, getting back to central banks want to stimulate, spur credit creation to stimulate economic growth. So there is no way we're going to see an economic recession. There is no way that we're going to have any kind of a major slowdown. And all of this focus on ridiculous incremental interest rate hikes. I mean, it's like there's this little tiny fly over here, this little fly over here that everybody is obsessing about, right? This little bug that everybody is obsessing about. And over here, there's this vast, this unbelievable developing positive story, this feast, this gargantuan, just utopian kind of thing developing right here on the other side. And everyone's obsessing about this little tiny fly. I'm telling you, this is not just the setup for a rally. This is the setup for I think I said this before, it's a setup for a major leg of a new bull market. This credit expansion, I mean, we have not seen something like this in a long, long time, if ever, because the last time this happened, you have to go back again to these government-backed loans that were put out at the beginning of the pandemic. This is not a government-backed thing. These are the banks having conditions now where they're able to make these loans. And that leads me to another point. I've been talking a lot about bank stocks, all right, which have been getting hammered. But, again, you got to understand that when everybody is doing something, panicking in a very, unsophisticated way, ignorant, not really understanding what's going on. Look, I just told you that bank net worth, what I say is the highest in what? Did I say 2 year bank net worth is the highest level in 9 months? I mean, if somebody's net worth is going up, if it's soaring, are you shorting that individual? Are you hey, that guy's in bad financial shape because his net worth is going up like crazy? No, you would say, look at that guy. His net worth is going up like crazy. Like, I want to be like him, or I want a piece of the action like him. I'm telling you, this is one of the best setups I've ever seen. Not to mention the fact that psychology is so negative right now. I mean, there's so much I could say about this. I don't want to keep you guys too long, but you really have to, sign up for my report. There's an individual subscription right now on my site. Go to www.pitbulleconomics.com. I'll put the link here. The reports come out on Monday. It'll be all in there. All the numbers will be in there. But this, I'm so excited about this. I mean, this is incredible. This is really, really incredible. And everyone, again, is focused on this little tiny, fly, this little speck over here, when there's this huge, amazing opportunity developing over here. I mean, it's just like the numbers, folks, the numbers are, they're mind-boggling. They really are. Anyway, that's it for today. It's Friday. Enjoy the weekend. I'll try to make a video tomorrow. If not, see you on Monday. Bye.